And this final chart here, this is the chart that I want viewers to screenshot, take a look at, take home, show to your parents, show to your friends, your family, and tell them that Bitcoin is potentially worth learning a little bit about because as of last Friday, there are now $55 billion worth of assets under management across all 10 of these Bitcoin ETFs.
Bitcoin hits 72,500, 600, 300. I'm not sure exactly where we're at the time of this recording, but I wanted to introduce my former research analyst who you all know and love. We were pumping out a ton of great content last summer. The one, the only Joe Consorti. I could have easily done this video on my own, but I wanted to get Joe's perspective because he goes in the weeds a little bit more. So today we're going to talk about, Bitcoin hitting all-time highs. We're not typically price prediction guys, but we will chime in on that and maybe a logical reason for why we think Bitcoin is going to do what it's doing. And then we'll get into a couple other macro factors as well. Thank you so much for doing this, Joe. I appreciate having you on, buddy.
For sure, Marco. Always good to chat with you, man.
Cool. So we're hitting new all-time highs. It doesn't really seem like retail is talking about it much, but either way, I'm going to make a YouTube video about it. You guys are doing great stuff at the Bitcoin Layer and then also on Twitter as well. I love following you. So why is Bitcoin doing what it's doing right now?
Yeah, so there are a couple of reasons. And the first, most broad one I'll talk about that isn't Bitcoin specific is it's following what the market's doing. And the market is really on this risk-taking tear. NVIDIA is the talk of the town, but it's not the only stock that's absolutely ripping. Earnings were really good. Q4 earnings, every single call that was had last month was extremely good. So really, companies are still firing on all cylinders, despite the Fed having tightened as much as it did. One of the reasons for that is the insane amount of government spending, just putting it simply, has kind of offset everything that the Fed has done. It's made it so that there's this huge delay between the Fed's tightening, if it ever actually shows up in financial markets, and the tightening that it actually wants to achieve. So with all this government spending, it's kind of caused this huge bull market to occur, whereas normally right now we'd kind of be in the weeds of unemployment really starting to tick up. And so that's what's happening on like the market-wide front. Credit is doing well, stocks are doing well, companies are well positioned for anything that comes to them. Yeah, there's some layoffs, but it's not terrible. Okay, so companies are doing well, specifically high-risk companies. Bitcoin is getting dragged up with all that just because of historical correlations, right? Bitcoin usually trades with these high beta risky assets. The other reason is, of course, Bitcoin has its own native things going for it. And I'll talk about three of them. I'll talk about the halving that's coming up. I'll talk about the ETFs, and then I'll talk about the current derivative structure. I'll talk about that last one first. So right now, Bitcoin's derivatives market is much more tame. It's much more muted than it was. We were last at this price in late 2021. The last time we were here, there were much larger premiums being paid by people who were taking on long positions than the premiums being paid today. Said differently, back in 2021, the market was really lopsided towards people who were betting on Bitcoin to go up. They were betting on it with leverage. And then when the price started moving against them, they had to sell, right? So they had to sell Bitcoin in order to close out their position. Whereas today, not only is there less overall leverage in the market, but the leverage that there is leverage that is short-sided, right? So people are short Bitcoin. And so when the price moves against them, when the price moves up, then they're forced to buy Bitcoin to close out their positions. So we have a more favorable derivative structure, and there is less overall leverage in the system, which makes Bitcoin much more stable at this price. The second thing are ETFs. Okay, so we had 9 new ETFs, 1 ETF conversion, where investors who've been locked in tax-deferred savings accounts, retirement accounts, right, 401ks, all the sort, they now have the ability to buy Bitcoin, and then the bank, the financial institution, what have you, that owns the ETF can buy Bitcoin on behalf of the shareholder. That's something that hasn't been present in the U.S. Now that it is, there are tens of billions of dollars in total assets under management. I think we're at like 60 billion last I checked on my monitor. So a lot of demand for these vehicles, particularly as people are seeing Bitcoin's outperformance relative to other assets. Year to date, it's the best performing asset on an absolute basis, so dollar for dollar. and on a risk-adjusted basis, so we're talking Sharpe ratio, has a Sharpe ratio of 2.1, which is the best risk-adjusted returns of any asset in the United States financial markets. Okay, so people are seeing this, they're hearing about these vehicles, they're calling up their advisor, they're calling up their brokerage, and they're allocating to it. And let me tell you, you know this, when this older money or more mature money that tends to buy these ETFs, way less speculative, and also they want to know what the hell they're buying, and when they buy, they usually own it and they stick with it. So that makes Bitcoin a lot more stable, and it also means that Bitcoin is a beneficiary of passive flows, right? People allocate a certain amount to their retirement account every other week, every month, whenever they're getting their paycheck. And that money goes directly into Bitcoin, that passive inflow. Now Bitcoin is a beneficiary of that. The S&P 500 has been the beneficiary of passive flows for however many decades since SPY was created. Now, with 10 different vehicles for investors to invest into, seeing these outsized returns, they're allocating to Bitcoin. An increasing number of them are allocating to Bitcoin. Now Bitcoin is a beneficiary of those passive flows. So we talk about derivative structure, we talk about these ETFs, and the third thing is the halving. And the halving is coming up as well. And Bitcoin historically rallies about 350% in the year post-halving. And in its first epic, in its first halving cycle, it rose like 7,500%. So just ignoring that extreme and taking the last two cycles, even, moving a little bit lower than that, we're talking 350, 300%. That's how high Bitcoin stands to rise. And then at that stage, you're looking at a price of like $360,000 by next April, right? The halving is coming up this April, right around my birthday, actually. And, happy birthday to me, pumping my bags. But that's basically where we're at. So market-wide factors coupled with a more favorable environment for Bitcoin. And still, we have more favorable events coming up for Bitcoin. Really all steam ahead.
Typically, the halvings, they last 500 days, about a year and a half, 12 to 18 months after is usually when the price pumps up until. So I know you mentioned the $300-something thousand Bitcoin. If you had to put, I don't want to say gun to your head or, if you had to be a betting man, what are you honestly thinking by the end of 2025 or by the end of this cycle? And is the cycle going to be shortened, do you think? Because it's actually reaching all-time highs before the halving, which has never happened before.
Yeah, so we're still early in Bitcoin's life cycle. So like the first time X or Y or Z has happened, we'll probably get a lot more of those before it becomes less common. So it's not super surprising to me that we hit an all-time high before the halving, given that these ETFs are now available, given how well market-wide risk sentiment is. I do think that, like, gun to my head, $150,000 Bitcoin, totally reasonable. If you consider the amount of time that it's taken for Bitcoin to double after it breaks its all-time highs, this is something that Bitcoin tends to do. Other assets that have a much lower market capitalization and are not absolutely scarce, they have a demand response function where more supply is created as more demand comes online. Bitcoin does not have that. It has a totally fixed supply schedule, so the rate at which new Bitcoin are being created, totally fixed for all of time. So this is kind of a unique asset, and in that, it tends to double after it breaks a previous all-time high. It's only not doubled one time before. It's fallen much more than it has risen, and that was in 2011, I believe, or 2012. Since then, Bitcoin has usually doubled within about 90 days of breaching an all-time high. And so considering there's an entirely new cohort of buyer Wall Street is buying, it's that kind of tells me that not only is Bitcoin going to be the beneficiary of its own unique attributes, absolute scarcity, but also fixed supply schedule, but also it's going to be the beneficiary of this huge new investing cohort that wants a piece of the pie. And that tells me that even though Bitcoin is much larger now, so it would be difficult to achieve these same percentage gains as past cycles, now that Wall Street is here, it tells me that, maybe the same percentage gains as past cycles aren't super far-fetched. And so that leads me to believe, ceteris paribus, if the market remains intact, if unemployment doesn't explode higher, of course it is an election year, so anything can happen. I do think $150,000 Bitcoin is a totally reasonable, some would say even conservative estimate for the end of the year, or at the very least, hit at some point this year.
Yeah, if you were to look at the text messages in my phone and literally search the phrase summer 2025, you would see probably 50 text messages in the past 4 years, just telling all my buddies six-figure Bitcoin by summer 2025. And, take the time machine 4 years later, and here we are. So, yeah, I don't disagree with you. I know it sounds crazy if you're new to the space, but do you have any visuals that you wanted to maybe pull up? I think we talked about that earlier. If not, I think this has been great.
We did, yeah. So I have a couple here, and I'll just go ahead and pull those up.
Okay, and before we get into that, guys, let's take a look at today's spot from Policy Genius. When creating an investment portfolio, you need to play offense and defense. If you think of a pyramid, the base of that pyramid should be your best defensive financial tools. For me, having a proper life insurance plan is the best defense you and your family can get. Make life insurance part of your financial planning this year. Start shopping now with Policy Genius to find the right policy to protect your family. If something were to happen to you, your family can cover expenses while getting back on their feet. My wife and I just did that with Policy Genius. Getting started with Policy Genius is simple. We filled out the information on the website, talked to their licensed agent, answered all of her questions, and she got back to us with quotes that made a lot of sense financially and also covered our needs. Policy Genius knows how valuable your time is. Their technology makes it easy to compare life insurance quotes from America's top insurers in just a few clicks to find your lowest price. With Policy Genius, you can find life insurance policies that start at just $292 per year for $1 million of coverage. Some options offer same-day approval and avoid unnecessary medical exams. Their licensed, award-winning agents can help you find the best fit for your needs. They work for you, not the insurance companies. That means they don't have an incentive to recommend one insurer over another, so you can trust their guidance. Policy Genius is for parents, caregivers, and anyone else who has people who depend on them. They simplify the process of getting life insurance so you can protect the people you love. No wonder they have thousands of five-star reviews on Google and Trustpilot. Your family deserves peace of mind. A life insurance policy through Policy Genius can give it to them. Head to policygenius.com/whiteboardfinance or click the link in the description to get your free life insurance quotes and see how much you could save.
So here is chart number one that I wanted to show, and this is Bitcoin halvings and Fed easing cycles. So I struck this chart a little while ago. You can see Bitcoin's price there is $50,000. This was struck less than a month ago, so it tells you how great of a month Bitcoin has had, rising $22,000 since I struck this chart on February 13th. But essentially, what has happened here is that Bitcoin's halvings have kind of lined up really, really well with the Fed's easing cycles, and this is it's quite remarkable because Bitcoin is kind of on this. Obviously, it has a halving roughly every 4 years, but the Fed has kind of found itself on that exact same calendar. Funnily enough, obviously we're about a month and some change away from the halving, and the Fed is slated to start cutting its interest rates very, very soon here. The Jerome Powell has said that rates will be cut by summer, at least one or two maintenance cuts, so very, very small cuts, just 25 basis points in size, and it's kind of funny. It is really mirroring every single past cycle that we've had. You could see that from the second Bitcoin halving in July 2016, it took 526 days to reach a new all-time high. After the third halving, which also lined up with Fed rate cuts, it took 547 days. So roughly around this 525 to 550 day range, we already hit an all-time high, and the halving and Fed rate cuts have not happened. And so this is still more really bullish fuel for Bitcoin. You have these two huge tailwinds that are still on the horizon: rate cuts, which will ease financial conditions, which will spur on this investment, spur on further risk on investment throughout financial markets, and the Bitcoin halving, which makes this absolutely scarce asset not even more scarce, but it reduces the issuance of this already absolutely scarce asset. So these two things are once again lining up, uncannily close to one another. So that's one chart that I'll show. And this final chart here, this is the chart that I want viewers to screenshot, take a look at, take home, show to your parents, show to your friends, your family, and tell them that Bitcoin is potentially worth learning a little bit about, because as of last Friday, there are now $55 billion worth of assets under management across all 10 of these Bitcoin ETFs. You could see that there was some trepidation early on. If you look towards the start of these inflows, the top is inflows broken up by ETF vehicle. The bottom is total assets under management. Of course, that also fluctuates with Bitcoin's price. But you could see here how these ETFs have steadily gained more popularity. And these last 2 weeks have been absolutely insane. Every vehicle has shattered one record or another. These are the most actively traded ETFs by volume every single day at this point, which is quite insane. And so people are allocating to this stuff. People are bidding it up like hotcakes. And you can bet that these are going to accelerate. Plenty of brokerages aren't even offering these vehicles yet, and they're getting huge demand from their customers, their clients saying, why the hell aren't you offering these? And so this is just a preview of what's to come. Ultimately, hundreds of billions of dollars are locked up in these brokerage accounts. And as they continue to see the sustained outperformance that Bitcoin has, you can bet that more people are going to be calling up their broker. And this assets under management, we've reached this in less than 2 months. You could bet 2 months from now it's going to be 100 million, and then a year from now, imagine 100 billion rather, and then a year from now, imagine what it will be. And so ultimately, I'll kind of leave off with what Alex Leishman said, the CEO of River. He said, you had 15 years to front run Wall Street. Well, guess what? Wall Street is here right now. And so I wouldn't want to be the last one putting some money into this thing, right? Whether it's 1%, 2%, 5% of your portfolio. Now that Wall Street is here, now that this is considered colloquially a serious asset, it's time to get some before it becomes too economically unviable for you to own a substantial amount of Bitcoin.
Love it. This was awesome. I have 2 quick questions. Well, first of all, this is a comment. I think this was the most successful launch of ETFs in history in terms of adoption, in terms of assets. Is that true?
If you add all 10 of them together, over the first month, it was the most successful month for a single asset in history. No one vehicle trounced what the gold ETFs did back in 2003 and 2004. But if you add all of the vehicles together and you just consider it Bitcoin ETFs, you buy an asset. Yeah, the most successful launch, the most successful 1 month period post-launch for a single asset ever. So a few asterisks in there, but either way, a wildly successful launch.
Okay, and the second thing is, let's talk about MicroStrategy very quickly. So for the people that aren't familiar, Michael Saylor basically turned his treasury and debt into a Bitcoin buying machine. They have about, I think, 205,000 Bitcoin at the time of this recording. So that has basically skyrocketed their stock price to about $1,500 a share at the time of this recording, give or take. Is that going to put them into S&P 500 territory, and is that inevitably going to make everyone who holds the S&P 500 ETF or some sort of ETF of the S&P 500 a Bitcoin holder themselves?
In a way, yeah. And it's funny because MicroStrategy, compared to all of the big mega cap tech names, it is outperformed by several orders of magnitude. It has risen by 445% over the last year, whereas Meta, the closest runner-up, which is Meta, couldn't even make a fraction of that. I have the chart up right here. This is MicroStrategy versus mega cap tech, 446%. The runner-up, closest runner-up is Meta at 170%. And so there are going to be MicroStrategy copycats this year, no doubt. I mean, the idea that you could just issue debt against your rising stock price to buy more Bitcoin, which is causing your stock price to rise, and then you do a split, and then you issue more debt against your stock. It's a remarkable flywheel strategy that ultimately will have no end because fiscal austerity is not coming back. And so Bitcoin will gain more value. It's really a remarkable thing. And you can bet your bottom dollar, I think, that more companies are going to be copying MicroStrategy. As for the S&P 500, it's inevitable. I mean, it didn't pass Walgreens. Walgreens just fell out of the S&P 500. But now MicroStrategy is the 301st largest stock, I believe. And so it's getting there. I think it's only a matter of time before it's included in something like the S&P 500, 100%.
Yeah, they have the market cap checkbox. I think they need the 4 out of 5 profitable quarters or something along those lines. I haven't looked into it, but they're basically there. So yeah, for anyone that's not familiar with what MicroStrategy is doing, I would look into it. And I think that's going to be taught in business schools decades, if not centuries from now. And I don't say that lightly. I think it's one of the biggest. I don't know. If you had like a most improved player for making like an NBA analogy, this has to be the most improved stock, and it's not even close.
Oh yeah, 100%. It's it will be 100% hands down the most imitated company strategy over the next decade for sure. I mean,
Let, let,
we talk
let's
about
take it one
things.
step further, Joe. Oh, sorry. Go ahead. Go ahead. There's a little lag. I apologize. Go ahead.
Oh, you're chilling. No, I was just going to say, like, we talk about acceleration, like fiscal policy is getting acceleratingly less austere. Monetary policy is getting acceleratingly more intense. Every single cycle, more money is printed. From the fiscal side of things, every single cycle, more money is borrowed. And the official projections from the Treasury say that they don't intend on slowing down. $7.3 trillion budget released for next year, fiscal year 2025. That's an obscene amount of government spending. And it's all going to fuel asset prices. And the one asset that can't be diluted is Bitcoin. And so more companies are going to see this, are going to jump on the bandwagon, and the Feds and Treasury's tools are going to become less effective, which will make Bitcoin all the more valuable as more people try to jump ship. And it will also make it so that the Fed, U.S. Treasury, what have you, chances are they're not too keen on Bitcoin. They try to regulate it away. That doesn't work. Very fun decade we're in for. That's all I'll say.
I think we're at the precipice of 5,000 years of gold, 50 years of fiat, and then who the hell knows what's going to happen after these situations play out. Because let's think about it logically. If we look at game theory, first it used to be some nerds on a forum buying Bitcoin. Then it was early adopters like you and I. Then you had businesses. Then you're going to have nation states, things like that. I mean, it's almost inevitable at this point. What do you think the next step is? I mean, you had El Salvador adopt it, I think in 2021. There is Bukele's Twitter feed where he's literally shaking hands with, I think, Qataris or Saudis. And I don't know. The signals are out there, man. What do you think are the next steps?
Yeah, next step is oil money, I think. You have the BRICS alliance. I don't generally take that too seriously because of how entrenched the US dollar is. I won't get into that. But you have oil money, and they're seeing that, okay, my dollars can be frozen at any time. My reserves can be seized. My dollar reserves and my gold reserves can be seized. I want to hold my money in a hard asset because I could see what price inflation does. I could see what the dilution of the dollar does. But I don't want to hold it in a hard asset that is physical because then I'll have to hold it somewhere. Chances are in a U.S. bank somewhere in New York or San Francisco or Boston or what have you. I don't want it seized. I'll allocate to Bitcoin. So I think that all these people are seeing a continued outperformance, but they're also enamored increasingly by Bitcoin's unique monetary attributes. And when you're dealing with people like the United States who have shown that their trigger finger is quite active when it comes to sanctions and civil asset forfeiture of foreign reserves, you're probably looking at that and you're saying, I'd like to allocate toward the money that can't be seized. And so I think it becomes more attractive than gold from that perspective. And some of these oil-rich countries are soon going to be trying to outbid you. And I'll tell you for a fact, they're going to outbid you. So great idea to get in before they do.
Well, let's leave it at that. So if you guys are here for quote unquote price predictions, we alluded to this earlier, but gun to Joe's head, he's saying 150. Gun to my head, I'm the same. I think that we're going to double from here. Depending on, in my opinion, you alluded to this earlier, Joe, I think that low unemployment is kind of the glue holding everything together right now. When you look at like credit card debt and things like that, I think that employment right now is critical. And if you guys are following any sort of tech or anything like that, layoffs have been happening over the past, 12 months or so. But we'll see. I don't know if that's going to reach Main Street, but at the end of the day, I think that's the glue. But, Joe middle class needs to figure something out. And I think, if you stay on zero with Bitcoin in 2024 at this point, you just aren't doing the homework, in my personal opinion.
Couldn't agree more.
Awesome. All right, Joe, you're the man. Thank you so much for doing this. Where can people find more about you?
For sure, yeah. Look me up on X, Twitter, just at Joe Consorti, the same name as it appears in the description.
Awesome. You're the man. Thank you, Joe. Have a good one.
For sure, you too.